If your money isn't working while you sleep, are you really building wealth? Most people hustle for every dollar. But the wealthy? They collect checks without clocking in. That's the difference dividends make. And today, I'm handing you the blueprint. Welcome back to the Infinite Income Channel. I'm your host, George Mayfield, better known as the Dividend Doctor. This show is all about stacking cash, shielding yourself from economic chaos, and building income that never quits. And today, we're diving into the quiet powerhouse of financial freedom. Dividend investing. Let's get this straight. Dividends aren't just bonuses. They're a core wealth strategy used by the financially elite to build reliable income streams, no matter what the market throws their way. When inflation rises, interest rates swing, or the economy dips, dividend payers often hold their ground and pay you to hold with them. So what is a dividend? At its core, it's your cut of the profits. You invest in a company, and they send you a portion of their earnings on a regular basis, usually quarterly. It's money in your account without having to sell shares or time the market. Now imagine this. You've got $100,000 invested in dividend-paying stocks with a 4% average yield. That's $4,000 per year in passive income, whether the market's up, down, or sideways. Double it to $250,000? You're making $10,000 a year while you sleep. Dividends compound over time, especially if you reinvest them. Many platforms offer dividend reinvestment plans, which let your payouts buy more shares, leading to even bigger payouts next quarter. That's your income snowballing in real time. Here's the kicker. Not all dividends are equal. You want consistency, reliability, and financial strength. So, these are the things I look for. Companies with a 10-plus year history of paying and raising dividends. Companies with low payout ratios. They're not handing out more than they earn. And recession-resistant business models with low expense ratios. Because I don't want my dividends eaten up by high fees. Now let's talk names. Dividend-paying companies like Johnson & Johnson, Procter & Gamble, PepsiCo, these aren't flashy meme stocks, but they've raised their dividends for decades. They're what we call Dividend Aristocrats, companies that have increased payouts for 25-plus consecutive years. If you're like me, I want broad exposure without having to spend time and effort researching stocks. Check out SCHD, a dividend ETF that pays quarterly and is packed with solid companies, offering diversification, income, and long-term growth. It's one of my personal favorites for building a reliable dividend base. Here's some other great dividend ETFs that you may want to check out. Monthly payers like SPYI, JEPQ, or a real estate investment trust like Realty Income, which also pays monthly. Retirees really love these monthly payers. It helps when the monthly bills come around. Here's what I love most. It's the dividends that gives you more control. When the market dips and panic spreads, you're still getting paid. You're not forced to sell a single share to get paid either, and you're not dependent on capital gains either. That's what I call peace of mind and control. And let's also do some myth-busting while we're here. Listen carefully. Dividends are definitely not just for retirees. They're for anyone who wants passive income and financial resilience. I started building my dividend portfolio years ago, and I've watched it grow over time. Now it's the pillar of my portfolio, and it should be for you too. Now here is a strategy that many people love, and one I've used successfully for years. It's called the Core Satellite Investment Strategy. The Core Satellite Investment Strategy is a method of investing that combines stability with growth potential. I think you'll really like this. So here's how it works. First, let's talk about the core portfolio. This is the foundation of the strategy, consisting of low-cost, diversified, and passively managed investments like index funds or ETFs. These investments aim to provide consistent returns over the long term and reduce the impact of market fluctuations. Next is the satellite portfolio. This portion includes actively managed higher-risk investments such as individual stocks, sector-specific funds, or alternative assets. The goal here is to capitalize on market opportunities and enhance overall portfolio performance. By blending these two components, the strategy seeks to balance risk and reward, offering stability through the core while allowing for growth and higher returns through the satellite investments. You start building your core portfolio with the simple and popular three-fund portfolio, consisting of an S&P 500 ETF like SPLG or VOO. Then add in a growth ETF like SCHG or VUG. The third component is a dividend ETF like SCHD or VIG. You've got the makings of a solid investment strategy that combines stability with growth potential and the all-important dividends. If you're serious about creating infinite income, then you need to be serious about dividends. They don't just pay you, they buy you time, freedom, and options. Dividends are your portfolio foundation. And now it's time for a segment we call the Dividend Doctor Portfolio Checkup, where I'll answer a listener question. Today's question comes from Cecil in Arkansas, who writes, George, I've started dividend investing using SCHD and a few individual stocks, but I'm still young. Should I reinvest all my dividends now, or take the cash and use it to build up an emergency fund instead? Great question, Cecil. Here's how I look at it. If you don't have a strong emergency fund, say 6 to 12 months of living expenses, then yes, consider taking your dividends in cash until your emergency fund is secure. Because no matter how strong your portfolio is, it won't help you if a car repair or layoff hits and you're forced to sell at the worst possible time. But once that safety net is in place, then flip the switch and reinvest those dividends into quality holdings and let the snowball grow. That's how you turn modest returns into serious passive income over time. It's not a get-rich-quick deal, but you can get rich in time. Great work starting early, Cecil. Keep it up. Before we close out today's video, here's a reminder. I'm not a certified financial advisor. This video is for informational and entertainment purposes only. Always do your own research and consult a licensed financial planner before making investment decisions. Thanks again for tuning in. If this episode gave you clarity, value, or a little fire to get your portfolio in shape, hit that like button, subscribe, and ring the bell so you'll never miss a video. Until then, keep stacking, keep building, and keep striving for that infinite income.